Today we will talk about Pepperstone, a platform that several people have asked me to discuss, but we will talk about many things that you don't hear elsewhere, and you will discover everything you need to know if you want to invest in this platform. Please remember that this particular video is a part of an ongoing series in which we are thoroughly analyzing numerous platforms and providing you with all the essential information you need to know about them before making any investment decisions. With that said, let's begin. Pepperstone was founded in 2010 and operates as a CFD broker. We'll talk more about this later. Currently, it has over 750,000 registered accounts in more than 160 countries. Now then, the first thing you need to know is that it has licenses from multiple regulators around the world, and this includes the ASIC in Australia, which is the Australian Securities and Investments Commission, the FCA in the United Kingdom, which is the Financial Conduct Authority, SEC in Cyprus, which is the Cyprus Securities and Exchange Commission, the DFSA in the United Arab Emirates, which is the Dubai Financial Services Authority, the CMA in Kenya, which is the Capital Markets Authority, the SCV in the Bahamas, which is the Securities Commission of the Bahamas, and this is the one that applies to Latin America. And here's something quite significant. Depending on your geographical location, a distinct license might be applicable to you, and based on the specific license, numerous aspects can vary. Therefore, I highly recommend that you verify this information prior to registering. And finally, BaFin in Germany, which is known as the Federal Financial Supervisory Authority. So, as you have just heard, the regulations are indeed quite stringent. Now, regarding the technical details of the platform, I can tell you that it offers more than 1,350 CFD instruments with an execution speed of less than 30 milliseconds on average and an execution rate of 99.89%. It operates on 5 different platforms: MetaTrader 4, MetaTrader 5, CTrader, TradingView, and the Pepperstone trading platform, which is its own platform. Furthermore, it does not impose inactivity fees, nor does it charge for deposits or withdrawals across the vast majority of payment methods. It also provides customer support services 24 hours a day, 5 days a week, with an additional 18 hours of support available on weekends. These are the essential facts you need to be aware of. Now comes the crucial information you truly need to comprehend and what nearly no one informs you about. As I previously mentioned, Pepperstone is a CFD broker, which stands for Contracts for Difference. And this is where what they don't tell you begins. A CFD is a contract where you exchange the difference in the price of an asset from the moment you open the trade until you close it. But, and this is key, you do not buy the actual asset. You do not own stocks, gold, or Bitcoin. You only speculate whether the price goes up or down. If you open a buy position and the price goes up, you gain the difference. If it goes down, you lose the difference. If you open, for example, a sell position and the price goes down, you gain. If it goes up, you lose. To thoroughly comprehend how a CFD operates in a detailed step-by-step manner, you initially select the asset, which could potentially be a stock, an index, a currency, a commodity, or directly cryptocurrencies. Subsequently, you determine the position, which involves purchasing if you anticipate the price will increase, or selling if you predict it will decrease. Following this, you employ leverage, and this is where matters become even more significant because you merely deposit a portion of the overall value of the trade, and this portion is referred to as the margin. Once you have successfully opened the trade, you continuously monitor how the price fluctuates and how your gains or losses vary in real time. Ultimately, when you decide to close the position, you receive the difference between the entry price and the exit price. Now, leverage is indeed the crucial aspect of all this. Leverage enables you to engage in trading with a larger sum of money than you actually possess. For instance, with a leverage ratio of 10 to 1, if you have $100, you are able to control a position worth $1,000. However, and this is something that is not often communicated clearly, this magnifies both the potential losses and the potential gains. If the price shifts in your favor, you can earn at a much quicker rate. But if it shifts against you, you can lose at a much quicker rate as well, and you might end up losing more money than you initially deposited. That indeed signifies you may end up owing money. Concerning the various types of CFDs accessible at Pepperstone, there are CFDs on individual stocks, where you speculate on the price movements of company shares without actually purchasing the actual stock itself. There are additionally CFDs on indices such as the S&P 500 or the Dow Jones Industrial Average. Furthermore, you also have CFDs on various commodities which encompass gold, silver, oil, or copper. Additionally, there are also contracts for difference on currencies, which is more commonly referred to as forex trading, where you engage in trading currency pairs such as the euro-dollar or the dollar-Colombian peso. And ultimately, there are CFDs on digital currencies like Bitcoin and Ethereum, though their availability can vary depending on your jurisdiction, as I mentioned earlier. Now, according to the regulations that Pepperstone must comply with, there are official risks that must be disclosed to you. The first one is the leverage, which, as I mentioned earlier, can amplify losses to exceed your initial capital. The second point is volatility, as prices have the potential to fluctuate rapidly, resulting in potential losses within mere seconds. The third point is complexity, given that CFDs are intricate financial instruments that are not easily comprehensible to everyone. The fourth point is that you do not possess ownership of the asset, signifying that you do not hold anything tangible. The fifth point, which is the most critical fact, is that up to 81% of retail investment accounts incur losses when engaging in CFD trading. This last piece of information is required by law to be disclosed to you, and I repeat it to make it clear, up to 81% lose money. Now let's talk about how everything works within Pepperstone in technical terms, because you need to know this information before making any decision. Pepperstone provides two primary categories of accounts. The initial one is the standard account, where pricing is determined by the spread, which represents the variance between the buying and selling price, and within this account, there are no additional commissions on forex transactions. This account is designed for those who do not want to pay additional commissions and prefer everything to be included in the spread. The second account is the razor account, where you have raw spreads, meaning much tighter than in the standard account, but you pay a commission for each trade. The commission is $6 for a round trip on the CTrader platform and $7 on the other trading platforms. This particular account is tailored for individuals who are looking for reduced spreads and are willing to pay a commission for each trade, as ultimately it may prove to be more cost-effective depending on the trading volume. Regarding the available platforms, Pepperstone gives you access to 5 different platforms, which we mentioned earlier, including MetaTrader 4, which is the classic one that everyone knows. There's MetaTrader 5, which is the most updated version with more tools. There's CTrader, which is a professional platform with fast execution. There's TradingView, which is perfect if you already use this tool for chart analysis because it is quite famous. And finally, there's the Pepperstone trading platform, which is their own platform designed for simplicity and speed. Now concerning spreads and commissions, I am able to inform you that spreads may commence from 0 pips in the Razor account. There are no inactivity fees and no charges for deposits or withdrawals in most methods, although additional commissions might apply depending on the instrument you are trading. With respect to leverage in accordance with regulatory standards, for instance, in this particular scenario for Latin America, we adhere to the SCV regulation, which is the Securities Commission of the Bahamas. The leverage for retail clients can be as much as 1 to 200 on major currency pairs, whereas for professional clients, it can be as high as 1 to 500 on major currency pairs. If you're in different jurisdictions, leverage changes. For example, under the FCA in the UK, leverage for retail clients is 1 to 30. For professional clients, check the website for exact details. Under ASIC in Australia, it is 1 to 30 for retail clients and 1 to 500 for professionals. Under SASIC in Cyprus, it is 1 to 30 for retail clients, and for professionals, you should consult the website. Under CMA in Kenya, it is 1 to 400 for both retail and professional clients. And under DFSA in the Emirates, it is 1 to 30 for retail clients and 1 to 500 for professionals. And under BaFin in Germany, it is 1 to 30 for retail clients, and for professionals, you should consult directly with their website. Now let's talk about how you deposit and withdraw money and what services are available according to your country, because this is something that varies quite a bit depending on the jurisdiction you are operating under. For those of us under the SCB regulation in the Bahamas, which applies to Latin Americans, the available payment methods are Apple Pay, Google Pay, Visa, MasterCard, PayPal, national and international bank transfer, Neteller, Skrill, UnionPay, USDT, which is Tether, and Pix, which is specific to Brazil, SPAY, which is specific to Mexico, and SotaPay. So, you have quite a few options to deposit and withdraw money relatively easily, but now comes something that almost nobody tells you, and it's something super important. Not every service is accessible in every country. Depending on the specific jurisdiction you are under, there are certain service limitations. Under the SCB regulation in the Bahamas, copy trading is permitted, and expert advisors, which are also referred to as EAS, are likewise allowed. These are software applications that are frequently utilized in the realm of foreign exchange trading to automate your trading strategy based on predefined criteria. Subsequently, trading signals are not allowed. Now, if you find yourself under other jurisdictions, the restrictions will change. For instance, under the FCA in the United Kingdom, copy trading is not permitted, expert advisors are allowed, and trading signals are not allowed. Furthermore, and this is important, the FCA does not allow cryptocurrency trading for retail clients. Under ASIC in Australia, copy trading is not allowed, EAs are not allowed, and signals are not allowed. Under the jurisdiction of the CMA in Kenya, copy trading is permitted, expert advisors are permitted, and trading signals are not permitted. Furthermore, the CMA does not allow cryptocurrency trading for any client. Therefore, depending on your location, there are certain activities you can or cannot engage in. This is something you should verify prior to opening an account, as the strategy you intend to use might not be permitted under your specific jurisdiction. Now, after everything I have explained to you, if you determine that you want to give this platform a try, let me elucidate something that few individuals mention. It is something exceedingly important if you are just embarking on your journey in the realm of investing or are on the verge of beginning to experiment. Pepperstone provides demo accounts. This is where numerous individuals make their initial significant error. A demo account is essentially a practice account where you operate using fictitious currency, so you don't risk anything substantial. You can try out the platforms, understand how CFDs work, practice strategies, and get familiar with the whole system. This sounds perfect, clearly, but there's a huge problem that almost no one mentions. The demo account and the real account are technically distinct, but more significantly, they are emotionally different. In a demo account, you might win 80% of your trades. You can observe your capital increasing and increasing. You can feel confident and believe that you have mastered everything. But when you switch to a real account, everything changes. And it doesn't change because the platform is different or because you're being cheated or anything like that, but because now you're risking real money. At this point, each trade you lose causes pain. At this moment, whenever the price shifts against you, you experience fear. Now, whenever you have a profit, you feel the strong temptation to close swiftly before it transforms into a loss. That's psychology. And psychology is 80% of everything. That's why many recommend taking things seriously when you start. That is to say, if you start with a demo account, don't make moves just to try, but do things that you would even do with your own money, so that in some way you can learn strategies that transition from the fictitious to the real and help you win. In my personal opinion, after conducting all this extensive research and providing you with all the detailed information, I believe that Pepperstone is indeed a very serious and reliable platform. It is regulated by numerous financial authorities, which offers a significant amount of security in comparison to other platforms within the same segment. It possesses advanced professional tools, rapid executions, highly competitive spreads, and an extensive range of instruments. From a technical perspective, it is indeed a robust platform, yet that does not alter the reality that 81% of individuals lose money when trading CFDs. And that significant 81% does not lose due to the platform being inadequate. They incur losses because CFD trading is exceptionally challenging, leverage is perilous, volatility is unpredictable, and the majority of individuals lack the necessary education, discipline, and risk management skills required to achieve profitability. So, you might inquire, is Pepperstone truly worth considering or not? I'm not going to definitively say yes or no. What I will convey to you is that if you choose to proceed with it, do so with your eyes wide open, fully aware of what you're engaging in, comprehending the risks involved, and never, ever, ever listen attentively. Never invest funds you cannot afford to lose. Because when investing here, losing is part of the game, and if you're not prepared to lose, then you shouldn't be playing. But if you're looking for a CF platform to trade this type of instruments and want something reliable, Pepperstone is definitely a platform worth trying. Having said that, see you next time. If you've made it this far, leave an upward chart emoji in the comments so I know you stayed until the end. See you. Bye bye.